Welcome to the deep dive. Ever feel like picking health insurance is kind of like going through a maze but blindfolded?
Uh-huh. Yeah.
Today, we're shining a light on one of the most mysterious parts of that maze, underwriting.
It's true. It can seem like a black box.
But understanding how it works can really empower you to make better decisions about your coverage.
Absolutely.
So we're using excerpts from a document called, let's see here, 7healthinsuranceunderwriting.pdf to guide our deep dive today.
That was good.
We're going to try to uncover the factors that actually determine how much you pay and maybe even reveal a few surprises along the way.
Ooh, I like surprises.
You ready to decode this with me?
Absolutely. Let's dive in.
All right, so first things first. What exactly does an underwriter do? They're not just sitting there flipping coins to decide who gets coverage, right?
Uh-huh. No coin flips involved.
Thank goodness.
Think of underwriters more like insurance detectives.
Okay.
They're assessing your risk level, basically how likely you are to file a claim, and then using that information to set your premium.
So it's all about predicting the future.
In a way, yes.
Wow.
They're analyzing a lot of data, statistics, even your personal information to kind of get a sense of your potential healthcare needs. And of course, your health history is a big part of that.
Makes sense.
They're going to look at your current health, any past medical conditions, family history. It's like building a whole medical profile for you.
It sounds very thorough.
It is.
But it's not just about whether you're currently running marathons or glued to the couch 24/7, right?
You're exactly right.
What else?
It goes beyond just your physical health.
Okay.
Underwriters also consider lifestyle factors.
Like what?
Things like smoking, excessive drinking, even, get this,
Yeah.
your credit rating.
Wait, my credit rating? What does that have to do with health insurance?
Yeah, it might seem strange, but some insurers see a correlation between your financial habits and your overall responsibility. So a low credit score, it might suggest to them a higher likelihood of what we call risky behavior. These are those moral hazards that could lead to more claims down the line.
Moral hazards. There's a term I did not expect to hear today. So they're looking at my finances to kind of predict my health.
It's just one piece of the puzzle, of course.
Okay.
They also consider your occupation. I mean, some jobs are just inherently riskier than others, and even your hobbies, believe it or not.
Hold on. My hobbies could affect my insurance rates. So if I tell them I'm a weekend skydiver, my premiums are going to go through the roof.
It's possible. Statistically speaking, certain hobbies carry a higher risk of injury.
Yeah, that's fair.
Underwriters use that data to adjust premiums accordingly.
Wow. This is getting fascinating and a little unnerving.
Uh-huh.
It's like they're building this incredibly detailed picture of me, trying to predict my every move.
That's a good way to put it.
Like a crystal ball.
Pretty much. They're really trying to assess your overall risk profile and then categorize you accordingly.
So where do all these risk profiles end up? Is it like a sorting hat situation?
Kinda. Based on their assessment, underwriters place applicants into different risk categories. The most desirable category is called preferred risk.
Preferred risk.
These are individuals who typically have excellent health, healthy habits, and just generally pose a lower risk to the insurer.
So the preferred risk folks are basically winning the insurance lottery.
Uh-huh. In a way, yes.
Lower premiums, better coverage, all that jazz.
Pretty much.
Yeah.
They're getting the best rates because they represent the lowest risk to the insurer.
Got it.
Then there's the standard risk category. These individuals kind of meet the average guidelines for insurability.
Average.
Their premiums will be a little higher than the preferred group,
Yeah.
but lower than the final category, which is...
Drum roll, please.
Yeah.
Risky business category.
Uh-huh. More formally, it's called substandard or rated risk.
Substandard risk, okay.
These applicants have some factors that, raise red flags for the insurer, whether it's a health condition, a lifestyle choice, or something else.
And I'm guessing those red flags come with a higher price tag?
Absolutely. Their premiums will reflect the increased risk they represent to the insurer. It's all about balancing the books.
Right, that makes sense.
It does.
This is starting to make sense, but wow, it's a lot more complex than I initially thought.
It is complex.
We've talked about all these factors that determine your risk level, but how does that translate into a specific dollar amount for my premium?
Right. Well, that's where the magic formula comes in.
A magic formula. Now you've got my attention.
It's not magic in the literal sense.
Right, of course.
But it's a pretty fascinating equation.
Lay it on me.
Essentially, health insurance premiums equal morbidity minus interest plus expenses.
Okay, let's break that down. Morbidity. Does that have to do with being morbidly obese?
Not quite.
Okay, good.
Morbidity refers to the rate of illness or disability within a specific population.
Hmm.
Underwriters are basically using data to predict how often people in certain groups might get sick or need medical care.
So, like, they're analyzing trends and demographics to estimate how many claims they might have to pay out?
Exactly. They're using statistics to kind of get a sense of the big picture.
That's smart.
It is.
Okay, I'm following so far. What about that interest part of the equation?
Okay, yeah.
Does that mean my insurance company is, like, secretly investing my money?
You got it. Insurance companies invest the premiums they collect. It's a key part of how they manage risk, actually.
So the interest earned on those investments can actually help offset the cost of claims?
It can, yeah.
So that's good for us.
It can help keep premiums lower for everyone.
All right, so we've got morbidity, we've got interest. What was that last piece of the puzzle?
Expenses. Running an insurance company isn't free.
Right.
You have to factor in things like, salaries, commissions for agents, administrative costs, even something called regulatory reserves.
Okay. It's like the cost of doing business is baked right into my premium.
Precisely. It's a delicate balancing act for insurers.
So my premium is basically a reflection of my risk level, offset a bit by the company's investment savvy, but with a little extra tacked on for their overhead. Got it. But there's more to the story, isn't there?
There is.
Oh, I knew it. What other factors are lurking in the shadows, secretly influencing my premium?
Well, there are a few more things we need to unpack. Let's start with the benefits you choose.
This is getting good. Tell me more.
I will.
Okay, so you're saying there are even more things that can affect my premium. I thought we covered it all.
Uh-huh. Not quite. Well, think of it this way. Choosing health insurance is kind of like ordering a pizza. You've got your basic crust, right?
Okay, I like where this is going. So the more toppings I add, the more expensive it gets.
Exactly. The more comprehensive your coverage, those extra toppings, the higher your premium is likely to be. It's all about customization and finding that right balance for you, for your needs, and your budget.
Makes total sense. What else should I be aware of when it comes to these kind of hidden premium influencers?
Well, your claims experience, or rather the claims experience of your group, that can also play a role.
Interesting.
And this is especially true for people with those employer-sponsored group plans.
Okay, yeah. Now this is where it gets really interesting.
It does.
I'm guessing this is where that power in numbers thing comes into play.
You got it. Insurers use something called experience rating
Experience rating. Okay.
to look at the history of claims filed by a particular group.
Okay.
So if a company's employees tend to have a lot of health issues or file more claims, well, their premiums might be higher the following year. It's kind of like a group project where everyone's grade is affected by the overall performance.
Oh, that's a good way to put it.
Yeah.
Wow, so it's not just about me as an individual, but also about the collective health of, like, all my coworkers.
Exactly.
Suddenly, those office donuts are looking a lot less tempting.
Well, everything in moderation, right?
True, true. But I guess you've hit on a key point there.
Yeah.
It's about that overall risk pool.
Exact.
And if you're part of a smaller group, is there another factor that comes into play?
There is, yeah.
Like
location, actually.
Really? My location. So even if I'm like a total health nut living in a tiny town, my premiums could be higher just because of where I live.
It's possible, yeah.
Wow.
Smaller groups often use what's called community rating,
Community rating.
which means everyone in a specific geographic area pays the same rate, regardless of their individual risk factors.
So if healthcare costs are generally higher in my region, my premium's going to reflect that.
That's right.
Makes sense.
It all comes back to that balancing act that insurers have to do.
Yeah.
They're looking at the big picture.
Yeah.
Regional healthcare costs, the claims experience of the group, and then your individual risk factors to determine that premium sweet spot.
Wow, this is mind-blowing. It's like they're putting together this giant puzzle,
Yeah.
using all these different pieces to figure out how much I'm going to cost them.
That's one way to think about it.
It is. It's a little scary, but fascinating at the same time.
It's definitely a complex process.
It is.
But, it's designed to try to ensure fairness and sustainability for both the insurer and the insured.
I see. Okay. So we've covered all these factors that go into setting my premium. But what about that actual underwriting process itself?
Right.
What does that look like for, like, the average person? What are we going through?
Well, imagine it's kind of like applying for this super exclusive club.
Okay.
You have to go through this multi-step interview process, proving you're worthy to join their ranks.
Okay, take me through this underwriting interview.
Let's do it.
What's step one?
Well, it all starts with the application, of course.
That seems straightforward enough.
Right.
Just like fill out a form, answer a few questions, no biggie.
Not so fast. The application is more complex than you might think. It's actually divided into 3 key parts.
3 parts. Okay, now you've really piqued my curiosity. What are these mysterious sections?
All right, so part 1 gathers that basic information about your name, address, birth date, that kind of stuff.
Okay.
Also asks about the type of coverage you're looking for, how much coverage you want, and whether you have any existing insurance. Oh, and of course, are you a smoker?
Right, the classic question.
A big one.
On to part 2.
Part 2 is where they really start digging into your medical history.
Okay.
Your current health, any past medical conditions, surgeries, medications. They want the full story. They might even request a medical exam to get a more in-depth look.
A medical exam. It sounds intense.
Don't worry, it's usually pretty routine. It's things like, checking your blood pressure, taking a blood sample, maybe a urine test.
Okay.
And the good news is the insurance company typically covers the cost of these exams.
Okay, good. That's a relief.
Yeah.
So what about this third part?
Right.
You mentioned something called an agent's report. Now that sounds a bit mysterious.
Ah, yes. The agent's report. This is where your insurance agent actually gets to share their personal observations about you.
Wait a minute. My agent is reporting on me. What kind of things are they saying? Are they, tracking my online shopping habits, too?
Haha, it's not quite that big brother-ish. They might comment on things like your financial stability, your overall character, your lifestyle habits, things that could be relevant to your insurability. It's almost like a letter of recommendation, in a way, for your insurance application.
Interesting. So they're trying to, vouch for me?
Yeah.
Paint a positive picture to the underwriter.
Exactly. A good agent's report can really help your case, especially if there are any red flags in your application that might need a little explaining.
That's good to know. So the application is clearly a big deal.
It is.
But are there any other hurdles in this underwriting interview process?
There can be, yeah. Especially if you're applying for a larger policy. They might request something called an attending physician's statement, or APS.
APS, okay. What's that all about?
It's basically a detailed report from your doctor about any medical conditions you might have listed on your application.
Okay.
The underwriter wants to get a really clear picture of your health situation straight from the source.
Yeah, they're really doing their due diligence, huh?
They are.
What else might they do?
Well, this is where things get a little more cloak and dagger.
Ooh, I like it.
They might check your records with the MIB.
The MIB, like those guys from the movies who erase memories and monitor extraterrestrial activity.
Not quite as exciting.
Darn.
MIB stands for Medical Information Bureau.
Okay.
It's a database where insurance companies share information about applicants' medical histories.
Ah, so they're comparing notes, making sure I haven't been embellishing my health record.
You could say that.
Interesting.
It helps prevent fraud and ensures everyone's being upfront about their medical past.
Makes sense.
But don't worry, an MIB report can't be the sole reason for denying your application.
Okay.
It's just one piece of the puzzle.
Good to know. Any other surprises I should brace myself for in this whole underwriting journey?
Well, depending on your hobbies and lifestyle choices, they might ask you to fill out some, specialized questionnaires.
Right.
Remember those risky hobbies we talked about?
Mm-hmm.
If you told them you're an avid rock climber, for example, they might want to know more about your experience level and safety record.
So those hobbies we mentioned earlier can really come back to haunt us.
It's possible. In some cases, they might even request an inspection report.
An inspection report.
Okay, this is where things get really interesting.
Tell me more.
An investigator will basically dig into your background, interview your neighbors, your colleagues, maybe even you, to get a sense of your character and lifestyle.
Wow.
And yes, they might even check your credit report again.
Hold on, my credit report again. What does my credit score have to do with health insurance? I thought we covered this.
Well, remember, it's all part of that risk assessment, right?
Yeah.
Some insurers believe there's a connection between financial responsibility and your overall decision-making.
Right. Okay.
They might see a low credit score as a sign of, potential risk-taking behavior.
So being financially responsible can actually make me a better candidate for health insurance?
You could say that.
Yeah.
It's certainly a factor for some insurers.
I'll keep that in mind.
Yeah. They're really just trying to get this holistic view of you as an applicant, your health, your habits, even your financial track record.
So it's not just about my physical health,
Oh,
it's about my whole life.
it is.
That's fascinating and a little unnerving, to be honest. It's like they're compiling this giant dossier on my life, analyzing every little detail to determine my, like, insurability score or something.
Haha. Well, it's not quite that dramatic, but they are trying to gather as much information as possible to make an informed decision.
Right.
And once they've completed their assessment, they'll either approve your application,
Okay.
decline it,
Uh-oh.
or present you with what we call a counteroffer.
Counteroffer. What does that mean? Like, they're willing to insure me, but on their terms.
Exactly. They might offer you coverage, but maybe with a higher premium than you expected,
Yeah.
a different deductible, or maybe some modifications to the benefits. It's all part of the negotiation.
Yeah. So it's a bit like a game of chess. You make your move, they make theirs, and then you have to strategize accordingly.
That's a great analogy.
I like that.
Yeah. So even after you've jumped through all the hoops, you still need to really carefully review everything and make sure you're comfortable with the terms.
Right. Okay.
Absolutely. You have the right to negotiate, to push back if something doesn't seem right.
Good to know.
Once you've agreed on the terms and everything is finalized, well, that's when you'll typically receive your policy.
So let's say I've jumped through all the hoops, I've aced this underwriting interview, and they've decided to welcome me into this, exclusive insurance club.
Right.
What happens next? Do I get my membership card in the mail?
Haha. Not quite. There are still a few more things to consider, like premium payment and policy delivery.
Okay.
We'll unravel those mysteries after a quick message from our sponsors.
Oh, the suspense is killing me. But I guess we'll have to wait to hear the thrilling conclusion to this underwriting saga. Okay, we're back. I'm ready to hear about these final stages of the underwriting process. We've survived the application, the medical exam, the mysterious MIB. What's left?
Right. Well, you've made it through the toughest part. Now it's just premium payment and policy delivery.
Yeah.
Those final steps that kind of officially seal the deal.
So once I've passed all those tests and checks, I just hand over my hard-earned cash and I'm officially insured.
Well, it's not always quite that simple.
Right.
We talked about how paying your premium up front with your application can sometimes give you some immediate coverage, though it might be limited.
Right. I remember that. But you mentioned there are different types of receipts that determine, when exactly that coverage kicks in.
Right, exactly. So let's start with the most common type, the conditional receipt.
Conditional receipt, okay.
Yeah, this basically means that your coverage hinges on you meeting certain conditions.
So it's kind of like a maybe you're covered, maybe you're not situation.
It's more like a you're covered as long as kind of thing. For example, the receipt might say your coverage is conditional upon, let's say, passing a medical exam or being deemed insurable by the underwriter.
So it's like a provisional coverage, like a temporary membership in the insurance club until they give me the official thumbs up.
Exactly. And there are even different types of conditional receipts. Like some of them, your coverage doesn't begin until the insurer fully approves your application. And others, well,
This is getting complicated.
I know there's a lot of moving parts.
Are there any other types of receipts I should be aware of?
There's the binding receipt, which is, I'll be honest, it's pretty rare in health insurance. It's more common with other types of insurance like, auto or homeowners.
Well, binding receipt, okay. What makes that so special?
A binding receipt guarantees coverage right from the moment you pay, regardless of whether you ultimately end up actually qualifying for the policy.
So even if I have a history of, like, fender benders or my house is a total fire hazard, I'm covered from the get-go.
Essentially, yes. But again, those are less common with health insurance.
Okay. Good to know. So let's say I paid my premium, I got my receipt, and I'm anxiously awaiting my, official insurance club membership card.
Uh-huh.
What happens next? When does that actual policy arrive?
Well, don't celebrate just yet. Remember, we talked about those counteroffers.
Huh.
The insurer might still have a few tricks up their sleeve. They might propose, slightly different terms than what you originally requested.
Right.
It's a bit like a game of chess. You make your move, they make theirs, and you got to strategize accordingly.
I like that analogy.
So they might offer you coverage, but maybe with a higher premium than you were expecting, or a different deductible, or maybe some, modifications to the benefits.
So even after I've jumped through all the hoops, I still need to carefully review everything and make sure I'm actually comfortable with the term.
Absolutely. You have the right to negotiate, push back if something doesn't seem right or just doesn't make sense. Once you've agreed on the terms, everything's finalized. Well, that's when you'll typically receive your policy.
Okay, so I'm finally holding that precious policy in my hands. I'm officially in the club. Is there anything else I need to know about this policy delivery stage?
Yeah, so there's this thing called constructive delivery, which basically means that you're considered to have received the policy even if you haven't physically signed for it yet.
Wait, what? How does that work?
Okay, so for example, if the insurer mailed the policy to your agent and it's just sitting there waiting for you to pick it up, well, that could be considered like constructive delivery.
So it's kind of like they're saying, we've done our part. The policy's out there in the universe. Is your responsibility to go grab it.
Uh-huh, you got it.
Wow, that's interesting.
It really highlights how important it is to, stay in close communication with your agent throughout this whole process.
That makes sense. They can help guide me through all the twists and turns, translate the insurance jargon, and, advocate for me if any issues come up.
Exactly. A good agent really is your ally in this journey.
Yeah. This has been an incredible deep dive. I feel like we've really cracked the code of health insurance underwriting.
I hope so.
I'm definitely going into my next insurance encounter with a whole new level of confidence, that's for sure.
That's great to hear.
Now that I understand what goes into underwriting, I can ask better questions, make more informed choices, and maybe even, improve my chances of getting the best possible rates.
Exactly. Knowledge is power, especially when it comes to something as important as your health insurance.
Absolutely. And remember, the next time you see that premium amount on your statement, you'll know there's a whole lot more going on behind the scenes than meets the eye.
That's right.
It's like the secret code that we've now deciphered. Thanks for joining us on this fascinating journey into the world of health insurance underwriting. Until next time, stay curious and stay informed.